this should be something for you to seriously consider pulling the plug on because you wouldn't you wouldn't trust someone to sail through rough waters if they've never been through that rough waters and only been sailing in a lake or a pretty mellow lake as an example. So you have to ask that question: what's their track record, and have they done this before? And look at what the risk factors are, what the plan is inside the PPM, as well as the people that are bringing this investment and deal to you. Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Hey, what's up, everyone? This is Path to Passive, the #1 podcast for tech professionals who want to learn how to build real wealth through real estate and alternate investments. And if you've been crushing your tech career and you're ready to start making your money work harder for you, this is the show where we break down everything from real estate, funds, syndications, to wealth strategy, mindset, and financial freedom. Before we get started, if you're into this content and you want to keep learning how to invest like a real professional investor, even if you're just getting started, head over to aritacapital.com and sign up for that Path to Passive newsletter. Just a newsletter right on the site. Every 2 weeks, I break down insights just like what I'm going to be covering right now, plus frameworks and real world examples to help you think smarter about money and freedom. All right. So let's get into today's episode. All right, so today we're going to be talking about the PPM. If you've ever opened up a 100-page document called the Private Placement Memorandum and thought, there's no way I'm reading through this episode is for you. Today, I'm just going to be talking about this document and simplifying the entire process. You know exactly what's in there without getting confused so that you know what you're looking at when you're investing in a private deal. Things like real estate syndications, private credit funds, or venture opportunities, so all going to have a PPM. And this is what we're going to be talking about today. And it's meant to be there to protect. It's how to focus on the parts that matter most so that you can read it like a confident, a limited partner or LP, not like you would a lawyer. So, who this episode is for? This episode is for really new accredited investors, especially tech professionals or people in high income careers who are starting to look at private deals and want to feel more confident reading the paperwork, reading the PPM here. So, if you're evaluating your first fund, syndication, or alternate investment, this will give you that foundation that you need to understand what's in front of you and what you're looking at. So let's start with what you usually get when the sponsor of that deal sends you the deal. You're going to see a couple of different documents, really 3 to 4 documents. The first one that you're going to get about the deal, say when you're interested, is you're getting the pitch deck, right? Or executive summary. And this is what you can think about as the marketing story, right? The second is the PPM, the private placement memorandum, which this episode is all about, but I'm just setting the foundation. The third is the subscription agreement. This is the actual contract that you sign to invest. And sometimes you'll get the operating agreement in as well, which defines how profits are split and who makes decisions about the actual deal within the sponsorship team. So think of it like a job offer. This is one of the ways that I think about this. The recruiter is the pitch, right? The pitch deck. The PPM is HR's legal paperwork, so to speak. And the subscription agreement is your signed employment contract. So let's talk about this. The PPM, or the Private Placement Memorandum, is the formal legal disclosure document that required for private offerings under the SEC Reg D, usually a 506B or 506C offering. And you need to learn more about that. I have episodes on that too, so definitely go check that out. The main purpose is simple for the PPM. It discloses the risk. Every possible thing that could go wrong, you're gonna find here. To describe the investment is the second part. This is what you're investing in, how it's structured, and how money will be used. And third, it's there to protect the sponsor as well, so they can show that they fully disclosed all the material facts. So if you're looking at this and you're reading it, you open it up and you see oh, this could go wrong, or this could go wrong, or this could go wrong. This is what you're going to find here. But the cool thing is, you're also going to find that other information about really what you're investing in, how it's structured, and where the money will be used. Now, if the pitch deck is the sales document, right, that pitch like that recruiter, the PPM is the truth document. It's where the sponsor says, here's what the deal is, and here's everything that could go wrong. So, this is where you're going to see just the facts. All right. So, inside of the PPM, now let's walk through the main sections and what you should pay attention to. The first thing you're going to find is the summary of the offering, what's being offered, the entity type, the minimum investment, as an example, and the target returns for this investment. Second is you're going to see the use of proceeds, where your money actually goes. And is it mostly for acquiring assets, or is it going to be eaten up by fees? Super important to look at, especially as you're comparing investments and you're looking at just the data. Third is that management and fees. Who's running the deal and how are they compensated? You'll see things like the acquisition fee, asset management fees, and the promote structures, and that is the profit split. This is something to pay particularly good attention to because here you get to see how your sponsor is compensated, right? And I can go into detail more in other sections and episodes of having alignment to the sponsors. But when we talk about alignment, this is where you get to see that alignment really by the numbers. The fourth thing you're going to see is risk factors. Usually the longest section. You don't need to memorize every single line here, but the scan for themes, look for leverage, liquidity. Could you exit early as an example? What is their operator risk and economic conditions as an example? These should be included here. Next, you're going to find legal structures. Who owns what? Voting rights, as another example, how profits flow and how decisions are made. You're going to find different clauses here. You're going to find information, and you're going to see all of things just like you'd be reading that manual of this particular deal. You're going to find here. Next, you're going to find the investor and suitability and exemptions. What is this? What this is that it clarifies whether it's only for accredited investors and which NCC exemptions applies. All right. So the thing here to remember is going through these things is that 80% of the PPM is risk disclosure. It's not meant to scare you, but it's required by law. And what you're looking for here and your takeaway needs to be clarity and alignment, not perfection. But you are going to get just the data here. So if you're here, you're a tech professional and you want just the data, this is actually could be the document that you actually like the most. So what's next? The subscription agreement. After you've reviewed the PPM, you'll complete the subscription agreement. This is your actual commitment to invest. It's where you write your investment amount, your entity name, confirm you're accredited, and sign acknowledgments that you reviewed the PPM. Once the sponsor countersigns, it becomes legally binding. It's short, usually about 10 to 15 pages, and you should always read it carefully before wiring funds. And I just want to include that information about the subscription agreement just to follow through so you know where it's placed amongst these different documents. In a later episode, I'll go deeper into the subscription document and talk a little bit more about the process, but I just wanted to walk you through the different documents, the pitch deck itself, where the PPM sits, where the subscription agreement is as well. So, how do you read these PPMs like a professional investor instead of getting lost in all of the weeds? Some of the questions that are good to ask yourself are, where does the sponsor make that money? Like I said earlier, this is all about the alignment and incentives, right? Alignment and incentives. Are they getting paid when you get paid, right? Who gets paid first inside of the investment? This is why you see things like pref as an example, so that the investors may get preferred returns first before it ever goes to the GP team or the sponsorship team. What that does is it makes it so that the team that's operating the business does that work so that the investor gets paid because you are a customer as well. And that's how that satisfies helping you think like a question like this. Other questions to ask is, what is the capital structure? So this is what I was just saying. What is the preferred return, the waterfall, the equity versus debt? Preferred return, who gets returns first? Is it you? The waterfall is, the structure at which the order of people get paid. Then equity versus debt. How much of that is being taken on for this particular investment? Next is, what is the track record, right? Have they done this before? If you're looking at things inside of the PPM and you're looking at some of those conditions as an example, you're thinking about those risk factors, what could go wrong, right? Who owns what and who's really making decisions? As part of the track and record is, do they have experience that they can even handle these types of uh, type of things that they're trying to go against with the risk factors? So if none of that adds up, this should be something for you to seriously consider pulling the plug on, because you wouldn't you wouldn't trust someone to sail through rough waters if they've never been through that rough waters and only been sailing in a lake, or a pretty mellow lake as an example. So you have to ask that question: what's their track record, and have they done this before? And look at what the risk factors are, what the plan is inside the PPM, as well as the people that are bringing this investment and deal to you. Lastly, for the fourth one here to think about is, what is the liquidity, and can you get out and when, right? What level of liquidity is this? And so all these type of questions here, just these four, is not to memorize every single term so that you can go through it, line by line within the PPM, but it's to understand how that money works inside of the deal. As usual, I always advise, ask a lot of questions to that sponsor, right? Ask a lot of questions to the team. If you're not getting the answers, it may be time for you to pull out. You are not forced to do anything. This has to be a decision that you're comfortable with. So, in closing, the PPM there isn't to intimidate you. It's just to inform you. Like I said, just the facts. So, when you learn to read these documents, you stop investing out of emotion of, does this really look really good or look really bad? Is it, all hype? And you start investing out of understanding, and use it as a place to learn, ask questions, and get more familiar. A bunch of them, and ask questions before you ever invest anyway. Really get your questions answered. So the next time you get a deal, don't skip the PPM, read the summary, skim the risk factors, check the fees, highlight anything that doesn't make sense, and ask the sponsor directly. The best ones will gladly explain. If you found this helpful, please subscribe. Check out the newsletter at aritacapital.com. Every 2 weeks, I break down frameworks, deals, and lessons to help you think like a professional investor, even if you're just starting out. Thank you so much, and I'll see you in the next one. Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.